true, it is still summer. It was, after all, 90 degrees in New York today. But a chill wind blew on Wall Street. Stocks plunged. The market, all snug and warm for months, turned icy, at least for a day. The Dow and the S&P 500 had their worst day since the Brexit vote aftermath at the end of June. The reason today, a Fed official hinted that an interest rate hike is not that far off. Now, that's not necessarily a bad thing. It suggests the Federal Reserve thinks the economy is getting strong enough to shrug off a rate increase. But it did spook investors who have become accustomed to easy money policies. And it spooked them doubly because the Fed official who spoke, Boston Chief Eric Rosengren, is normally in the easy money camp. Here are the closing numbers for a bruising Friday. The Dow Jones Industrial Average tumbled 394 points to 18,085. NASDAQ dropped 133. The S&P 500 slid 53. All of the major indexes fell more than 2% for the week, the biggest weekly drop for the Dow since the first week of the year. Pisani has more.
Well, it's about time. Even by summer doldrum standards, this has been a long period of below-average volatility. The last time the Dow moved 1% or more was July 8th. It was 2 months ago. So the Fed's Eric Rosengren, he's a dove, has reminded everyone that the markets are not positioned for a rate hike in September. And he has made a case that it could well happen. So now you're seeing a scramble. First, the traders sell interest rate sensitive stocks, which is why utilities and telecom and home building stocks were down today. Second, with a steepening yield curve, you buy financials like insurance companies and banks, which benefit from higher rates and which have already been rising going into the events today. Third, you bid up the dollar, which hurts commodities and commodity stocks like steel and iron ore and copper names, which were all down about 3% today, like Freeport-McMoRan. So who wins? Well, Main Street is not a fan of down days like today, obviously, but this is great news for the professional trading community. Wall Street has been miserable all summer because the trading volumes have been awful. This kind of activity, this kind of volume is a godsend to them. The problem is this: if the Fed does nothing in September, all this gets unwound again. We'll go back to where we were just a few days ago. So what's going to happen? Will the Federal Reserve actually do anything? Are they really going to raise interest rates? Well, if the Fed really is data dependent, the data has not been that good recently, so you don't hike. And yet, Rosengren and friends seem to really want to hike rates. What's going on? It may be that the Fed is not that worried about the data, that they are more worried about losing credibility if they do nothing. So we're in a hall of mirrors. All we can do is maintain a slightly more heightened state of alert until the September 21st Fed meeting. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.